All right. Okay. And viewers, there's some very important breaking news coming in, and therefore, experts, I'd like you to just stay with us. But Donald Trump, the president of United States of America, has made yet another important announcement. He has effectively imposed 50% tariffs on Indian goods. And to give us more information on this development, I have my colleague Rishabh joining us on the phone line. Hi, Rishabh. Could you please give us more details on this?
Right, Malika, what we're picking up is the fact that basically Donald Trump has delivered on his promise of substantially hiking these tariffs on India. Definitely the con being here, India's energy and defense purchases from Russia. And that is something that is clearly the major contributor of tension between India and US when it comes to trade talks. So we're seeing an effective 50% tariff on all Indian goods. Remember, sectoral tariffs of about 50% were already being imposed on steel and aluminium goods from India to the US. About 25% was already being imposed on auto parts. And now we're seeing an additional 50% being imposed on the rest of the goods. So effectively, whatever is being sent from India to the US will be charged a 50% tariff. That's what we're picking up. This basically gives us more clarity in terms of what the penalties were. So remember, last week, Trump had specified that India will face 25% tariff plus certain penalties for its relationship with Russia. And that has now come for effectively doubled tariff from 25% to 50%. That's what we're picking up now. We're waiting on official reactions to pour in from the government, yet to see what sort of action they will be taking to support exporters in such an environment. So we are keeping our eyes peeled on that.
Right, right. So definitely reiterating the fact that the breaking news of the hour currently is that Trump is to impose additional 25% tariff on goods from India. And now I have my colleague Tamanna joining us on the phone line. Hi, Tamanna. Could you please go ahead and give us more information on this?
Yeah, so actually we have to understand the context of this, Malika, more than anything else. Trump is using this tariff war and this tariff stick to attack Russia, essentially. And this is where India is getting dragged in the middle of it. He has reiterated lies and untruths on calling India the tariff king and high extent of tariffs. In fact, the Indian government has also busted those myths and the myth that India is the only one who's importing crude from Russia. In a very detailed response, just about 48 hours ago, you will recall, we put out details on why these are simply double standards. The amount of fuel and LNG that the European Union imports from Russia has been overlooked. America's own imports from Russia on various minerals, etc., have been overlooked. In fact, a question was asked to US President Trump on this, that what about America's imports from Russia? And he says, oh, I have to get back to you on that. Sorry?
Tamanna, can you hear me?
Yes, I can. Can
yes,
you hear
please.
me?
Yes. Please go ahead.
Yeah. So I'm saying that India has busted all these claims one by one, calling out the double standards and the hypocrisy of America when it's pointing fingers at India for importing from Russia. What about all of the items that America imports from Russia? In fact, a question was posed to US President Trump on this by an Indian journalist, to which he had no answer. He said, I don't know about this. Let me get back to you on it. Now, instead of getting back to the question on what America imports from Russia, he's gone ahead and slapped these additional tariffs of 25%. What's becoming clear over here is that President Trump seems to be infuriated by the fact that India is not kowtowing to this bullying like a lot of other nations may have. Effectively, the tariff rate does go up to 50%, but now we've seen Trump go back and forth on his claims several times. We'll have to see what it is at the end of the day and whether there's more room for negotiations. Just one more point that I want to add, Malika, is that just a few hours ago, there was an announcement that Prime Minister Modi will be visiting China on the 31st of August and meeting with Xi Jinping. It's very possible that President Trump has woken up in the morning, seen this news, and then maybe just put out this social media post. So we have to see how this all pairs out. I'll just wrap up this comment with one last point of what Nikki Haley tweeted out and posted just about 12 hours ago, where she urged President Trump that even if you're upset about high tariffs, etc., which by the way is not the truth, just look at how you are behaving with India and China. China has been given a 90-day pause on tariffs while negotiations continue. Why are you behaving like this with a trusted ally? Now, that really is the question. This is not the kind of response that any nation will expect from a trusted ally.
Right, Tamanna, thank you so much for explaining that in such great detail. And before we actually go ahead and cover this story, I would first like to thank our Ask Profit guests, Girish Sadani, and our other guests, our fundamental guests as well, Sarvendra Srivastav, our technical guests. Thank you so much for joining us this evening. But we will be covering Trump's tariff story in greater detail. But Tamanna, back to you. Okay, we've lost Tamanna in the meanwhile, but as she highlighted that this is a major step, and Trump is sort of perhaps going really, he is intensifying tariffs on India. But I have my colleague Hiral also joining us on the phone line at the moment to comment on this particular development. Hi Hiral, please go ahead.
Hi. Malika, so clearly, this is a major step that Trump has taken, because initially we were talking about 25%. Now you're talking of an additional 25%, which brings it to 50%. Now, when you talk about India-US trade relations as well, India-US is one of India's largest trading partner. And if you have to talk about data as well, India is exporting nearly goods worth $81 billion to the US, and this is a number that was back then in 2024. And US accounted for nearly 17 to 18% of India's exports as well. So clearly India does have a trade surplus with the US, and the potential impact, initially when we spoke about 20%, we were talking of around $31 billion, which was a potential loss of around $31 billion. And now when you're talking about 50%, we can actually ascertain how much that will be, because it could actually go up to almost in that range of around 60 to $100 billion in terms of the potential export loss as well on the back of the tariffs. Now, clearly, the sectors which have the highest tariff differential with the US as well, there will be sectors like animal products, footwear, transportation, and chemicals. So these are few of the sectors which we should be keeping our eyes on. Seafood, pharma products, iron and steel, gems and jewelry, nuclear reactors, electrical machinery. These are the ones where, the export value trade balance data is what we have. And based on the tariff differential, these will be impacted. Auto and auto ancillaries is also a sector with high exposure to the US. Pharma, we've already spoken about earlier. And the impact in terms of the EPS per company is also going to be probably in double digits. So this is a major move, and a 50% tariff is going to mean a major impact in terms of the export-oriented companies, Malika.
Right, Hiral. Thank you so much for giving us that insight as well. But we have my colleague Tamanna Inamdar, the managing editor of NDTV Profit, on the phone line back again. Hi, Tamanna. Please continue. We would like to get more comments and insights from you.
Yes, I believe we have Mr. Shashank online. If we do, what the thing to ask, Malika, and to understand is what really is the impact for India. And at 25% of tariffs, the impact being penciled in by most economists was between 0.2% to 0.4%. Now, assume that you will have a 50% tariff, which is frankly a far-fetched assumption. From what we've seen in the Trump presidency thus far, all through this calendar year and from April onwards when this tariff saga started, Malika, was that Trump makes these tariff calls and then comes back on it. He's done that with pretty much every nation. And it's likely that at the end of this negotiation, it will happen with India as well. Having said that, what's the most that it will impact the Indian economy is something that the market will look at tomorrow as well. And one of the things that could have some impact is on specific sectors. So you saw pharma having a bad day today. You might expect continuing pain in the pharma sector tomorrow, and pharma stocks, especially stocks with the high exposure to America and exports to America. You can see textiles also having some of that pain as well. But more and more investors are digesting this as more of Trump rhetoric. So you might see some weakness when markets start trade tomorrow, but then don't be surprised if it does settle in. I'm also waiting to hear what India says. And in fact, let me go to Mr. Shashank on this. His former Foreign Secretary. Mr. Shashank, hi, Tamanna here. Great to speak with you on, at an important day and in the middle of what is clearly a tariff assault. And that truly is the question. How do you think India should and will respond?
I don't think India is going to respond in kind. It will only try to find alternative markets where it can supply commodities at a lower tariff. And also it will try to continue negotiations with the Americans so that more equitable arrangement can be arrived at, because in the long term, these policies don't really help the American economy also. I think it's more personal to President Trump and his advisors. And this is a very old philosophy which was there around the time of the Second World War, that by raising tariffs, you can somehow improve your terms of trade. Later on, the Americans were the ones who worked very hard to lower the tariffs and other non-tariff barriers through GATT and WTO mechanisms. But now I can understand that they are in a difficult position because their economy is not doing that well. And temporarily their economy is doing much better because of these tariffs which are being imposed. And many countries have accepted the unilateral opening of their markets to America and accepting these high tariffs. So I think that way it is good for America because they have been able to get their, let's say, more of their friends. Only problem comes with their major trading partners. There, I think there has been no progress, whether China, whether Mexico, Canada, and India is willing to take the pain because India would like to improve relations with the United States, would like to work out a bilateral trade arrangement, but we understand that they have problems on their side, and they are not able to convince the Russians and Ukrainians to come to a settlement and to stop the war, because once that war stops in Europe, I think perhaps most of the problems will go away about purchase of the oil and other commodities from Russia, because after all, USA and EU also are buying these commodities from Russia.
Exactly. They continue their purchases, and they continue their purchases for very, very sensitive items as well. Sir, please do stay on with us because, we need to get more aspects of where that diplomatic conversation goes and how much room is left there. But I also have Mr. Pankaj Murarka on the line with me, and this is an important take to have in view of how markets will respond tomorrow. Pankaj, hi, Tamanna here. Markets have really been able to absorb these tariff shocks by and by because, frankly, to be honest, it's because no one's taking what Trump says seriously. And you expect that he'll say 25% one day and it'll go back to something else. But now the ferocity with which he has been filing on these tariffs and has arrived at a 50% figure right now, how do you think we'll see the market reaction tomorrow?
Well, there will be some knee-jerk reaction tomorrow, Tamanna, but all of us, as you rightly said, we know a lot of this is posturing and trying to play the hard ball to get the best deal. So, and all of us have seen how impulsive and unsophisticated gentleman the American president is. So, while there could be some short-term knee-jerk reaction, I still think that there is a deal between India and US, bilateral trade deal somewhere down the road, not in 4 weeks or 8 weeks, I'm not sure. I just want to put one more thing in context. See, there was a point of time in 1998 when India did nuclear tests and declared itself as a nuclear nation, and US imposed economic sanctions on India. At that point of time, India economy was a much smaller economy at about $400 odd billion. Yeah. we've dealt with US, whenever US had dealt a tough hand with India, this is not the first time they're doing it. We've dealt with in the past. Today, Indian economy is much bigger, much larger, much more stable. So, meaning much to one's disliking, these kind of things do happen. But I think as an economy, as a country, India can still deal with it economically. And I still believe that there is a bilateral trade deal somewhere down the road, whether 4 weeks or 8 weeks, whatever the time it does take.
Yeah, I mean, that seems like the logical conclusion. And there is an important meeting in Russia, which the Americans are also happening, so maybe things will diffuse there. But having said that, Pankaj, where do you see the most impact in terms of Indian economy and Indian companies? Because we know about pharma to some extent, textiles, but do you see other sectors also getting impacted?
Well, the bigger impact of these tariffs is on labor-intensive, export-oriented industries. So, which essentially is at the forefront is textiles, gems and jewelries, which will get impacted the most because it's easier for U.S. customers to switch those orders or their buying power to some of the neighboring countries or the competing countries where tariffs are much lower. Now, if Vietnam is at 20% and India is 50%, it always makes sense for global customers, let's say like a Walmart, to source their textile from Vietnam. So to that extent, I think labor-intensive industries will get impacted much more in that sense because there, and it's easier, for these U.S. customers to, as I said, to switch to these neighboring countries.
Sure. Pankaj, Hiral on this side, we were already talking about how the FPIs would also look at such a deal because in this month itself, you've seen FPIs who've gone ahead and sold worth almost 6,000 odd crores. Do you think that the FPI sentiment also could stay weak because India's relative friend of US, beneficiary of China plus one image, is actually taking a knock now?
I still think I don't see this in any manner impacting long-term India-US relationships, and I don't see this influencing long-term investors. But yes, Hiral, you're right. When we talk about foreign flows, we also do get flows coming from ETFs, which are essentially short-term money or somewhat what we call hot money. And we could see some knee-jerk reaction and some outflows in India-driven ETFs, which can lead to some more selling for foreigners. So all of that can happen, meaning it's difficult to really predict what happens in the next 2 or 3 days. But I think there could be some knee-jerk reaction. All I can say is the sum total impact of this on the Indian economy at the economy level is probably about 50-60 basis points. Meaningful impact, but not something which will completely dislocate Indian economy. I'm just saying, presuming a hypothetical case that we have 50% tariff for the next 6 months, I still think India can do a 6% real GDP growth this year, despite these headwinds. Secondly, we also need to see, given the fact that India is a significant consumer and buyer of oil in international markets, what it does to oil prices, because I saw there was some initial spike in oil prices, and that could have a cascading impact on global growth as well. So I think there are many dimensions to it in that sense. And while, as I said, markets could react, have a knee-jerk reaction, but I still think that India's story.
So absolutely, I think the knee-jerk reaction will come in. We'll have to see whether this is really turning into 50% or not. But I just want to go back to Shashank, if I can, on where is the room to negotiate right now when there is a daily, social media salvo. I'm just wondering what diplomats in the room even say to each other at the end of it. What can India now go further and offer to crack a deal that we haven't already in several rounds of negotiations?
No, India can try to talk both to Russia and Ukraine and see what are the possibilities of ending the conflict. That's number one. Secondly, India can tell the Russians that we are coming under this 50% tariff wall. So please help us by reducing the price of the oil which are supplying to us for some time. And that may be another way out. The third one would be to find alternative markets elsewhere and also negotiate deals with the other countries which are with other oil suppliers. America, unless it raises the prices very high, I think they might be also interested in substituting the Russian oil. So one can try to find what are the possibilities from different countries and work on that basis, because I remember the Americans had told at one stage that now China can buy oil from Iran. So I presume that they would have no objection even India buying oil from Iran. So I think these are the various opportunities which we have to see. And then bilaterally with the United States, of course, our teams will continue discussions to see what best detailed negotiations results can be achieved at the course of our talks with them.
Shashank, so overall, you're talking about negotiations that could continue. So would it be right to say that the hope of an eventual trade deal, which will not be at 50%, and the 50% getting reversed is still there, taking into consideration Prime Minister Narendra Modi's visit to China as well?
No, Prime Minister visit to China and the visit by our National Security Advisor and later Foreign Minister to Russia, I think they were all in the pipeline, and they are with reference to the Shanghai Cooperation Organization Summit in China and also President Putin's visit later in the year to India. So I think those will continue because India has a role to play in the Eurasian region, and we are trying to build up all these infrastructure connectivity projects in Eurasia and with Russia. So they will go ahead. The point is that we will try to get the reductions in the tariffs, but I don't think India can do very much about it. If the decision is taken unilaterally by President Trump and his team, we just have to see what are the alternatives that we can find and try to see how best we can achieve the results that President Trump desires without losing our calm and achieving things in a manner which will be good for everyone.
No, so just Shashank, just to get your take on that, I understand that this is part of SEO, and these kind of visits don't take place overnight. They're planned for months and months. But the fact that Prime Minister Modi is visiting China after the Galwan skirmish and after so many years, I think just creates a very important imagery as well at this time, isn't it? Doesn't this meeting now take on more significance?
No, because India-China relations are extremely important in their own right. For some time, we felt that Chinese were hand in gloves with the Pakistanis in promoting terrorism in India. And when Pakistan tried to attack the Indian air bases, whereas the Chinese and the Turks, they were helping them in a very online and hands-on manner. So I think that's why we were not very happy with that. But I think apparently there is some change in that. And ultimately, we have to make sure that we have a dialogue going on with our important neighbors so that our interests are kept in mind by the leaders of the country. So we have to continue talking to the Chinese also and see what best arrangements we can work out. I mean, after all, we were the ones who pulled out of the RCEP because we didn't want to give our market to access to China at that time. But maybe now we can think in a different way. If we can put together the commodities and some other services and investments and some other kind of projects whereby India's interest will be taken care of. Because if you were not willing to give China investments in India by saying that, okay, we do not know how you are going to put your sensitive things inside the projects and then take all our information, secret information out. But I think if the Americans are trying to do the same thing, keeping all their online platforms, all their information in America, so you have no access to that. So I think, therefore, we have to see how best to take care of our interests. And whoever is able to give it to us, whether Chinese or Russians or the other, we'll have to work on that basis.
Santosh Rao also joining in to this conversation, head of research partner at Manhattan Ventures. Santosh, thank you so much for your conversation with us.
Morning.
You know, when this whole tariff war began, all bets were that India would be first to the finishing line with a trade deal in hand, which would be beneficial to both sides. It seems to have turned into a very, very different story. How do you think global investors will look at Indian equity in light of what is looking like a 50% tariff rate?
Yes, near term, this escalates this issue to a totally different level. It's not very constructive, not good for India, of course, but there's a lot more at stake than economics. There's national pride. There are other things going on. It's a democracy. Things don't happen in a linear line, straight line. They have to take care of their constituency. And I thought President Trump would be more careful and more understanding of India's limitations as well. But that said, yes, in the near term, it's a shock. It's not constructive. It's not fair. It's very random. It's very erratic. And just on the way he's acted with Brazil, the way he's acted with Switzerland to some extent, and China is, of course, off the hook for some reason, and India is going after India. And some of the facts are just from what I'm reading and hearing, some of the facts, he doesn't have all the facts. I mean, they're exporting a lot of stuff or importing a lot of stuff from Russia. So things like that. So I think the dust will, in the near term, there's going to be a little bit of disturbance, some disruption rather, but I think better sense will prevail. That's my belief. He has a good relationship with Modi, but for some reason, something went off track. And we thought India would be the first, like you said. It's not happening. They didn't realize how important the agricultural sector is to India. And I think there's some problem with communication, conviction, and all that stuff. So we'll have to wait and see. Yes, the near term, the headline is not good. There's going to be a headline shock. But I think there will be some, let's see. I hope they meet at the highest level and sort something out and come to a decision. So I'm not giving up on good relations, but and U.S. You have to remember, U.S. by itself is also slowing down. Things are not going to turn overnight. He wants all this money coming into U.S. It's not going to happen overnight. So in the near term, there is slowdown. The labor market is weakening, is softening. So he has to be careful in terms of really disrupting the whole trade dynamics for U.S. and the worldwide rather. So let's see where it goes. But near term, not good news, not constructive, and net negative for India more than US.
You know, net negative for India more than US. Can you just go back on that, Santosh, and just clarify that as well? Why do you think it's net negative more for India than the US? Because, yes, they are a large export market for us, but we are also a domestic-led economy, isn't it? I mean, it's their inflation rates which will go up for the average American consumer, and especially if it comes to generic drugs and pharma exports.
Yes. In the long term, in the near term, I think India, like I said, in the near term, there's more shock to India than US because we've seen so far the tariffs have had no effect on the company's financials. They're all reporting good numbers. In fact, earnings are much better than expected. It was expected that earnings will rise 4%. They're already at 8 to 9%. So we haven't seen the full effect of tariffs. So I think that's what they're counting on. They think it's not a big deal, but it is going to be a big deal down the road for US. I think companies are still winding down their inventories, using up that thing. So they have a buffer in terms of passing down the costs. But at some point, they will pass down the cost to the consumer, and it's going to affect the inflation rate here. But that's a little further down. But in the near term, I think India does have the depth on a relative basis compared to other countries. They can withstand this for a while. But just to keep it very in the long term, I don't think India wants any disruption to their flow. They have some targets that they want to hit also in terms of growth and moving to the next level of GDP. But I think that's what I meant. Like in the near term, there's going to be the news flow is going to be negative. It's going to if it's going to affect foreign investment into India, because they're going to slow down, not because anything's wrong with India, because they just want the dust to settle. They don't know where this is going. And same thing is happening in the US. A lot of CEOs don't know what's next. Pharmaceutical companies don't know what to expect next. So many things going on. So there's a little bit of disruption, slowdown. Everyone is like, just wait and see what the next step is, just because he's very erratic, very inconsistent in the way he's acting and very so. So I think that's going to play in US. It's already playing, but in India it's going to play more, and it's going to show up more because the depth that India has is less than what US has. US can withstand a little disruption, but India I think needs to stay on track and not afford too much disruption.
Ajay Sahai is joining us from FIO, giving us the exporter's point of view. Mr. Sahai, do you see this as a massive hit? 50%. We don't have the details. It's just been an elan which has been done actually, that 50% is the tariff, 25% extra for imports from Russia. What is the kind of impact you see?
That's absolutely shocking and disappointing. It will be severely impacting India's export to US because in most of these sectors, we will be outpriced in the market by around 30 to 35%. Most of our competitors will have a tariff in the range of 15 to 20%, where we will be subject to 50%. It is likely to impact roughly 55% of India's export to the US, balance 45%, which is under Section 232. This 25% additional tariff will not be applicable. So probably that market will retain, but for the balance 55%, we have to be ready to take a jolt, and probably that kind of duty differential is not possible to absorb. Yeah, even we were approaching the government to provide some kind of support to us, but now the difference is so wide, neither the industry nor the support from the government will be able to bridge the difference in the landing price of the products from India vis-a-vis our competitors.
Okay. Shashank, thank you so much for joining us. Upasana Bhardwaj is also joining in. Let's get an economic view on this and an economist view on this. So this 50% comes in. What's interesting as well is that this is 21 days after the date of this order is when this goes into effect. Now, I don't know if this is going to be looked at as, again, 21 days of a negotiating period. What is going to be the impact? Upasana, if worst case scenario, 50% is the tariff rate, what is going to be the impact for the Indian economy?
See, there are 2-3 aspects here I would just like to highlight. As you just mentioned, it is effective 21 days later. And I think what really matters here is that these 21 days does provide a window for more detailed negotiations. We might have some productive outcomes out of that, and it may not eventually turn out to be as adverse as it appears today. But having said that, obviously at the moment, the 50% tariff, plus I would also highlight that, the other segments which already had a 50% also witnessed additional 25%, which means that, the steel, aluminum, copper, etc. go up to about 75%. Now, that overall is clearly negative, and I would agree with the other panelists who mentioned that, effectively, if we exclude the exemptions, then about $55 billion out of the $90 billion is something which comes under stress worth of exports to the U.S. So clearly, this is going to be a difficult time. How much of, this entire increase in tariff gets shared between different stakeholders from, our exporters in India to the U.S. corporates, to the U.S. consumers, that needs to be seen. But there is a limit to which margins, how much of, absorption can be done to this increase in cost, and hence the margins will take a hit significantly. So I guess this is clearly, it's looking more and more negative as we progress. But given that we have a 21-day window, we can only hope that we would arrive at some kind of a negotiation and close a deal, which is slightly more palatable.
Upasana, do stay on with us. Mr. D.K. Mittal is joining us now on the conversation, of course, former banking secretary. Mr. Mittal, thank you so much for speaking with us as we're trying to make the most sense of what has been unfolding at this furious pace. First, let's start with the impact. And do you think that the 21 days that has been given for this to come into effect is essentially a negotiating period which has been put out for India and the United States?
Absolutely. That's a window for the purposes of bringing negotiation on the table. And that's why they have delayed it. Maybe they will delay it further because they want to use the threat of more duties on Indian exports and negotiate on the terms which US wants.
What can India now bring to the table in your view, Mr. Mittal? Because there have been extensive negotiations going on, and from what we understand, the red line now has been drawn at access to our agricultural sector. This does not seem something that we're going to relent on. Reducing our imports from Russia, is that what you see as the next step?
So let me divide into three parts. One, that what is being done by the US is against all principles of discussions, trades, tariffs globally. US was one of the sponsors of WTO. WTO works on a principle of most favored nation treatment to everybody. There is no policy, no framework, no exception to any country to raise duties on anybody and start charging duties as you want. It's not permitted. So they have demolished WTO, and I am confident after some time they will come back again that we want WTO. The second part is when they impose duty, it is ultimately a duty on their own imports. Their own customers will have to pay for it. How do we assume that we have to bring back the prices to a level that the prices in the US remain the same? The only issue is if there are other competitor nations, right? They have a lesser duty. To that extent, that can happen. But that's something to be seen for each product. See, the product classification at 8-digit level, it does not mean that this is the same product. So it is each product export in each group which has to be seen that what is the uniqueness of that and can anybody replace it easily. The third part is we have to look at the country's future. A short-term impact of whatever it is, and for whatever time Mr. Trump is imposing these duties, we should look at the long-term interest of the country. That is most supreme to all of us, all citizens, whether it is affecting me as a businessman individually, that's fine. But country needs to live, and we need to be together with the government to support it out. Today, if we yield on what US is asking, then we are demolished. As a country, we are destroyed. I don't think anybody wants that. Because if the country is destroyed, those who are exporting today and going to suffer, they will also get destroyed. So let's not look at that. And the last point for me, dealing with the US is much different than we dealing with any other country. There, the government is driven by the corporates. Each government has some favored corporates, and one has seen that in the government how these corporates reached out to us, and how did we get a quid pro quo for the country's interest in many things. So it is a question of the government has to be very carefully looking at. I mean, they have so many pain points. Boeing case is a fit case when the country should say that there was a fault with the Boeing, the Air India flight. There's no doubt about it. But we are not doing that. And there are similarly many more cases, many more business interests of the US corporates in India, where we should say that if you're pushing us to corner, then we have no choice but to push you to corner as well. So, but the last point from me is let's not speak anything. I think the statement from MEA was not required. We should not provoke anybody. It wasn't required. It did not serve any purpose. Everybody knows the facts.
Mr. Mittal, let me ask you on that. Let me just deep dive on that a little bit with you, sir. Why do you think that statement was not required? Because beyond the point, you have to stand up to a bully. At some point, you have to stand up to a bully, and this is essentially bullying.
It is not. You see, that statement could have been as analysis of some of the reporters. See, we wanted to bring facts to knowledge of everybody. A statement by the government is a very strong thing. Why do you have to have that? It doesn't serve any purpose whatsoever. You could always ask media, press, or anybody to give out these facts as their own analysis, which is in public domain. There's nothing great about it. But what is the purpose of announcing with the government and taking a fight of the nature? Knowing a person is unreasonable. Knowing a person who should be rational with India when they look at India as a partner and they want to punish India. So it is not strategically correct. It doesn't serve any purpose. It has not achieved anything.
So we are not talking to anybody who is rational, who follows policy of the world, who believes in WTO. We are not talking to anybody like that. So if this was to end, ideally it should have been done somebody in the Washington Post, not in India. Why should we get it to India? See, these are the smart things to be done by us to manage, or maybe bring to Financial Times. They put up the news and what for India is being punished. So that carries much more weight. It has a much more impact on the Trump government than what has come out through the MEA statement. It is unfortunate that we went into that trap. And that's why he got a ground to say, okay, I will put 25% more. And even now, we should not react anything officially from the government side. Absolutely no need to panic. We should stand hard with absolutely head high, and there's no need to take. And we are always ready to talk. We should always be ready to talk on senses, and we should always be ready to talk with facts and figures and see that how does it serve my interest, serve your interest, and beyond that, it's not possible for me to go down. There is no other way to deal with it. And see, another point would be the courts have been giving very, very judgments in the Supreme Court, whether the president has powers or not. Now, that's a fit case. We have such an Indian diaspora in US. They are very powerful, very effective. There are so many lawyers. I mean, they could be put into courts, into the importing, and all importers are unhappy about it. The importers could really gang up there and go, okay, what is this happening? You disrupt my supplies. I have taken contracts of some of the inputs coming from India, and they now become 50% costlier. My contracts are only frozen. What do I do? So these are so many options available to us. We should try to stand up to this, what to say, a war on our national respect, national dignity. We should stand up to that in a very smart manner. We should not be having a street fight with them. There is no way. He wants a street fight. He's a street fighter. That's what he enjoys. And we should not get into that.
No, so Mr. Mittal, looking at your formidable reputation and experience in the WTO, my question to you, and it could be a very simplistic question, is why is the world taking this? Because India is not the only one who's facing this kind of street fight, as you called it. Isn't it time that an organization like the WTO steps in, that other nations step in and say, hey, this is not the way negotiations can go on?
See, WTO has been destroyed by the US. WTO had teeth only through dispute settlement mechanism. So the US decided that they will not approve any judges, and that dispute settlement mechanism was destroyed about 10 years back. So WTO is now a toothless tiger. They can't do anything. A statement from them, the WTO DG has no capacity or capability or strength or to say courage to speak against the US. There's no way they can speak. We should not expect. We should again, you see, we have many options available coolly. I mean, this is a time when China, US and India should get together. And the biggest threat to the US is the dollar. And the time has come in the world when countries need to take a leap that, okay, dollar needs to go down. And Mr. Trump is pushing the world to that extent. He's not understanding what he's trying to do. If the world unites, then they say, we will, say, Brazil already annoyed so much, South Africa so much. So fine, you don't want to deal with us. Okay, we also don't want to deal with us. My trade will get reduced by $40 billion, so let it be. We'll see that, what do we do? But if nobody will supply to, where will you live? I mean, China, they put duties on Canada. They're neighbors. I mean, this is total mindlessness. Mexico, 35%. What are you doing? They are your NAFTA partners. They live next to you. What kind of treatment you want to mete out to your neighbors? So look at the nature of the person with whom you are dealing. So my suggestion is absolutely be silent, act very tough back in rooms, use all channels, including litigation channel in the US, use political channel in the US, which are the interested parties, use the screw tightening on the US interests in India, which are close to the Trump administration. Everything is available. And then combine with all countries. At this time, forget about anything. China, Russia, and Brazil, South Africa should come together and say, okay, very coolly, without saying, dollar is not to be cleared debt by us. Let us see what happens.
Who's talking right now?
Nothing will happen.
So, Mr. Mehta, that's an interesting point that you're making, but just for the benefit for all our viewers, we need to just recap what has happened so far. Initially, we were talking about a 25% tariff, which would actually come into effect on the 7th of August. But now an additional 25% tariff that has been imposed, and this will kick in effective the 27th of August. Those are the key details that we are picking up. And the major impact over here is going to be in terms of the export-oriented sectors like pharmaceuticals. In fact, that has been one of the sectors that was ruling under pressure today. Apart from that, textiles, I think last 2 to 3 trading sessions have been really weak for this sector. And I think this was something that all of these companies were probably anticipating as well. And in anticipation of this, the pressure did continue. Overall, if you talk about energy companies as well, companies like Body Energies, Premier Energies, all of them are the ones, as you're seeing on your screens, which could potentially see an impact as well in terms of trade today. And the key is, how are FPIs going to look at India? Because we were talking about India as a friend of USA, a China plus strategy play for the FPIs as well. To get more details on this and how others are viewing it, we have Mark Chandler, Managing Director at Bannock Burn Capital Markets, joining in. Mark, welcome to the show and a pleasure to speak to you at NDTV Profit. My first question coming to you is an additional 25% tariff. What would this actually mean, according to you, for the markets from here on? Because 50% is something I don't think so any other Asian country is looking at.
I think you're right. This is a very high level of tariff. What amazes me, I'm an American, U.S. citizen, and the U.S. imports materials, agricultural things from Russia. And I'm surprised. It's not about like whataboutism, but it's really about hypocrisy in the U.S. foreign economic policy, putting a tariff on India. And Indian goods coming to the United States. I mean, I think that it's hypocritical. And also, here's what's happening, right? The U.S. says if another country like China or India trades with Russia, we're going to punish Americans by raising the consumption tax. That's what the tariff is. So on one hand, I think yes, Indian sectors will be hurt by this. I do not expect India to stop trading with Russia, whether it's for oil or whether it's for weapons. I think that that's not going to change. And I think that the cost is going to be borne in the U.S., both in the short run as a tax on consumers, but also in the longer run as the U.S. seeks to build up an alliance against China. India was a key player in that. And now I think that this will strengthen India's traditional desire to be in a more non-aligned grouping.
Yeah, that's an interesting point, Mark. But stay with us. Let me go back to Santosh. Santosh, you did mention in the previous point as well that this will somewhere slow down the way FPIs are looking at Indian markets. Do you think there is a potential where the FPI who slow down investments in India will be in sectors which are export oriented, which have exposure to the US? But will that churn happen where FPIs will then start betting on India's growth story from a domestic perspective, sectors which have high domestic exposure only?
Yeah, it's too early to say. I think in the near term, it'll hit export-oriented companies. But you know what? I was just listening to everybody. I just don't see how this can go on. I know all the countries are waiting for things to calm down. I think India was the first to really resist US so aggressively. But better sense needs to prevail because we need a good trading order right now. So yes, it'll affect India in the near term, but we have 21-day cooling off period. So let's see where that goes. There will be some concessions on both sides, hopefully. But if it doesn't work, then yes, it's definitely going to affect companies and just affect the flow of funds into India, because we don't know where that'll end. How aggressive, how much the Indian government wants to escalate this, and how much US government wants to. So we just don't know at this point. At this point, it doesn't look right. It needs this inconsistency, this hypocrisy needs to be exposed. Hopefully something will prevail, some sense will prevail, and maybe even Prime Minister Modi gets involved at some point at the Trump's level and then kind of sort it out. So we don't know yet. But right now, the way things stand, is just not right. It has a negative flow, a negative effect on the whole information, on the headlines, on everything. So we don't want that total disruption at this point. So let's wait and see. So it's really too close to call, but export-oriented countries companies will definitely get impacted a lot.
I mean, export-oriented companies will, and if you see your screens as well right now, 50% tariffs is where India is at. We are way beyond the other Asian countries as well. China is below us. So there is an absolute impact that you see in terms of sectors like textiles and pharmaceuticals, chemicals, etc. But Mark, we're talking about the impact in terms of Indian markets. But you also have an indirect impact that comes in terms of the US, where inflation is going to touch the roof with these kind of tariffs, when you're talking to companies from where you're exporting. How are you seeing that aspect of it, and how do you see Donald Trump really looking at it?
Thank you. First, I would say that one element that we haven't included, of course, is Russia itself. And the U.S. has a deadline of Friday for Russia. So if Russia announces a ceasefire on Ukraine, then these extra tariffs that the U.S. has imposed on India and possibly China might not come into fruition. I think you're right as well. Since last Friday in the U.S., we've been focused on the jobs market and the likelihood that the Federal Reserve will have to cut rates in September. However, next week, we get the latest U.S. CPI reading. And to your point, for the third consecutive month, headline U.S. CPI and core CPI are likely to rise. And so I do think that on the good side, we are seeing some of the impact of the tariff increases. Yes, it's true that some businesses like Japanese automakers have eaten by narrower profit margin some of the cost of the tariff. But we see a number of U.S. consumer type companies like Walmart talking about raising prices to cope with the higher tariffs. So I do think that this is what the Federal Reserve is concerned about. On one hand, the tariffs are a big tax on consumers. That is a depressant on the economy. On the other hand, the tariffs increase prices, not only those imported prices, or the prices of imported goods, but also domestic producers are raising their prices because they can. And so we are looking at somewhat firmer U.S. CPI readings.
Right. Mark, let me also get at Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Peter, welcome to NDTV Profit. A pleasure to speak to you as well. I think a couple of days ago on NDTV itself, you clearly made a comment saying that you don't believe these tariffs will be long-lasting, and it's not to the best interest of India and not even to the United States. Now, after that comment that you made that time as well, we're talking about a 50% tariff. What would you have to say now?
I say the same thing. I just think it's a tactic to get India to negotiate a trade deal. And I think the key point here is that President Trump wants India to buy American oil. And I think, this extra 25% tariff, which brings it up to 50%, is likely to give the Indian government an incentive to make a deal and to purchase oil from the United States. Look, this is, in my opinion, is not going to be long lasting. This will wreck the Indian economy. It will cause inflation. It will cause job losses. And to a certain degree, it just creates more protectionism if these tariffs go in for a long period of time. That's not to say that they're not going to be in place for a month or two, but I think at the end a trade deal will be announced, and I think India will be purchasing American oil. That's the whole essence of this extra 25% oil. So it's just a question of time, and I think when you escalate a war of words coupled with action, it generally leads to an end. And the end is usually a good ending. So I think there will be an agreement. And I think India has no choice at this point. And so it's just a matter of time.
Would it be right to say that the next 20 days, because the deadline is the 27th of August, will be used as negotiating days between India and the USA? And by the time we again come back to the 27th August deadline, there would be a rejig, would probably be no 50% tariffs as well.
Yes, I think so. I mean, I believe that that there's a better chance of the tariffs not going into fruition, and that a deal will be struck. And I think this whole tactic of increasing tariffs, obviously, you know, will bring about a trade solution. And that's not only going for India, that's going to mean for other countries as well. So it's just a matter of time.
Quick question, Peter, I have is in terms of the trade-off that you mentioned about that, US wants India to buy crude from the US and probably reduce their exposure with regards to where Russia goes. What is that trade-off that India will have to do on that front, number one? And number two, what's that major differential that one should actually pencil in from a pricing perspective as well?
Well, I think the trade-off is going to be oil. And I think that India will begin to purchase American oil. Now, I think that, that President Trump is not going to want them to totally not buy Russian oil. I don't think that's the case. But I think it has to reach a happy medium. And that happy medium, I think, will be negotiated. And if that happens, that's not to say that there won't be tariffs, but they're not going to be at 50% or at 25%. They might be closer to maybe 10 and 15%, and not at levels that would totally wreck the Indian economy.
Peter, hi, Tamanna here, and great to speak with you. I don't know if I heard snatches of your commentary out of context, but let me ask you in any case. I think I heard you say that India has no choice but to agree to what the terms are. Just wanted to get your view on that, because I think as far as access to the agriculture and dairy sector is concerned, that looks tough to give. Where could this negotiation actually go in your view?
Is that question directed to me?
Yes, Peter, it is.
Yeah, okay. I think